so you want to buy a foreclosure at auction. Great way to get a good deal, right? Okay, it can be a great way to get a good deal. Now, I'm going to be doing a series of videos on foreclosures and auctions and all of that stuff because the big thing is none of them are the same. None of them are the same. There's so many different ways to buy a foreclosure. You can buy a foreclosure from a realtor. You can buy a foreclosure from a courthouse step. You can buy a foreclosure in a sheriff's sale. You can buy a foreclosure online. There are so many different ways. But the one thing that you really want to make sure that you look at first, before you look at the house, before you fall in love, is the bidding terms. Yes. So if you're on one of those auction sites, you're gonna wanna go to the bidding terms and you're gonna want to really understand what they are. There's generally a couple key things in there. What I'm always looking for is the buyer's premium. What does that mean? Okay. So let me give you an example. I had a couple recently, lovely couple, first-time home buyers. We had them qualified for a mortgage with 3% down. Now, this particular auction they were looking at did allow financing, so that was good. However, when we went into the bidding terms, we noticed that they were going to be charging a 5% buyer's premium on top of the purchase price. So what that means is, let's say the house is $200,000 and the buyer's like, yes, I'm gonna get it for $200,000. Not really. They're really getting it for $210,000. So they're gonna have to pay the auction house $10,000, and then the purchase price of the house is $200,000, and they're putting down their 3%, which is $6,000. So instead of the $6,000 they thought they'd be coming in with their down payment, they're now coming in with that 3%, the $6K, plus that 5% buyer's premium of $10K. So 6 became 16. And, in this situation, that was a problem. It was also a situation where we were gonna need the seller's help with closing costs. This was not an auction that was gonna help you with closing costs in any way, shape, or form. So when all was said and done, we were probably $20,000 to $25,000 short because there's no way that we could do the buyer's premium and the closing costs and the down payment. Okay, now here's the thing. We noticed that up front. We got the bidding terms before they bid, and that's very important, and a lot of people don't do that. A lot of people just start bidding, they send in their deposit, and then towards the end they're like, wait, what? I mean, we always check, but if you're working with a lender that doesn't deal with foreclosures, you could have that experience. But you're watching this video, so you're not gonna have that experience. So no matter what type of foreclosure auction it is, I want you to get the bidding terms. So beyond this buyer's premium, it's going to tell you if there's a non-refundable deposit, so that if you can't perform, they get to keep your money. It's going to tell you if financing is allowed. There's some where it's either cash, a renovation loan, or nothing, or it's just cash. And the last thing you want to do is take your whole family out to see a house that's all cash when you need a loan. And then the last thing you really want to look for is if you'll even get to see the house before you buy it. Yeah, that exists. There are foreclosure sales where you buy the house and you get to see it after you give them all your money. That doesn't work with loans. But if you have cash, that could happen to you. So keep an eye on this channel, subscribe if you're interested in this topic, because I'm going to be going more and more into it as we see more of it in the market. But the number one thing to learn from today is get those bidding terms and make sure you understand them. Thanks for watching.